You're listening to the Millionacres Podcast. Our mission at Millionacres is to educate and empower investors to make great decisions and achieve real estate investing success. We provide regular content and perspective for everyone, from those just starting out to seasoned pros with decades of experience. At Millionacres, we work every day to help you demystify real estate investing and build real wealth.
I'm Deidre Woolard, an editor at Millionacres, and thank you so much for tuning into the Millionacres Podcast. We're back to talking about house hacking today. I keep coming back to this strategy because I've seen it work for so many investors and friends of mine. So our guide on this journey today is Andrew Kerr. He gave up life in the corporate world for nonprofits and then discovered real estate was a key to financial freedom, which is, I think, something that we're all looking for. He's bought and sold properties, syndicated deals, and he's just had a wide variety of real estate experiences, and he's kind of seen it all. So welcome, Andrew.
Yeah, thanks for having me on. I'm excited.
Awesome. Well, let's start with the story of your first house hack.
Yeah, so I didn't even know it was house hacking at the time. I took this unusual route of not going to college. I ended up in mortgage banking and I was doing loans for folks. And all of a sudden I realized, like, hey, me and my buddy are getting ready to go rent an apartment together. Our rent was going to be more than mortgage payments that I was seeing other people get. And I said, this just doesn't really make a lot of sense. Let me go buy a place. And then my buddy can rent from me. And now I'm living really cheaply. He's helping covering my costs and all the other benefits of owning real estate, like the equity growth from appreciation and pay down. And, this was at 20 years old in 2002. So, a lot of big websites weren't even around yet. I don't even think house hacking was really a term at that point, but it was really just sort of by accident, not something that was super intentional. Just this idea of, hey, seems like a cheaper, better option that will be good for me long-term financially versus renting.
What market was that in?
Raleigh, Durham in North Carolina.
Nice. And so you were 20 years old. How hard was it for you to get a loan?
It was actually pretty easy, being that I worked for a mortgage company.
Oh, well, that does help.
My boss just did the loan for me, and at that time I was really lucky where I stumbled into it. I did really well, was making great money. So it made it really easy where, I knew exactly what people were the underwriter would look for down payment and for credit and income and all of that. So it was probably the easiest loan I've ever done.
Well, that kind of brings me to my next question, which is on your website. You talk a lot about getting your financial house in order before you start any kind of real estate investing journey. And I think that it's such a good lesson. It's so hard for people because they just want to jump in and do it and they're so excited. What do you think are some basic guidelines that people need to keep in mind before they even consider their first house hack?
Yeah, and I really look at it as real estate as a whole. To do a real estate deal, you need a property, you need some sort of down payment and income, and then, you need to have some sort of collateral or down payment with it. And if, you can find a great deal, but you don't have any money and you don't have experience and you have the bad credit, it's close to impossible to do a deal. You've got to bring on someone else. So when folks want to jump in, I always say, look, that's awesome, but take a step back and look at your credit. Are you having enough income to qualify for a loan? Is your credit borderline? Maybe you're a 600 or a 610 score and you need a 620 to qualify. Or, if you just paid down a credit card for another 3 months, your credit score is going to be higher. You can get better financing terms, and really just sort of look at it at that place of, house hacking is great to help get you ahead financially and fix a lot of financial mistakes, but sometimes you just need that, one or two little steps before there. And, for most folks, it's not something that's going to take 2 or 3 years to sort of fix your financial house. Most folks can do it in 1 to 6 months and then go do your house hack, and you're accelerating everything that you are doing.
Excellent. So your first house hack, it was with a friend, so that's not an issue. But I think one of the things that people are most scared about when it comes to house hacking is, oh my gosh, I'm going to have a stranger, in the other half of the house or in the basement or whatever. How do you kind of walk people through that?
Yeah, and there's been so much publicity around house hacking over the past several years. The only negative I would say with that publicity is it highlights mostly the roommate style of house hacking, where you buy the house and you have multiple roommates, and really that's only good for folks that are in their 20s or single, or maybe just casually dating and not sort of further along in life. But as soon as you start to have a family or you get serious in a relationship, that roommate style of house hacking just doesn't work. So I immediately tell folks, like, that's just one style. There's several other main styles, like having that separate income suite, which really got popular from that. I think it was HGTV show, the Income Property, brought that up. Then there's the ADU style of house hacking, and then the other really popular one folks know about next to that roommate style is the more traditional small multifamily, where you live in a duplex and you rent out one unit and you live in yours, or it's the triplex or the quad. So I try to immediately say, look, you got to match the style of house hacking that's best for you where you're at in your life. And even when you look at the property types, there's so much more beyond that. Are you really outgoing? And maybe Airbnb's your thing, where you got a lot of turnover, but you can get higher income, or maybe you like the midterm style of tenant, where you rent to like travel nurses for 3 months, or you go with a traditional long-term tenant, that stays 12 months or 24 months, or maybe you don't want to deal with tenants at all, so you can outsource it. There's just so many ways to do house hacking and make it fit where you're at in your lifestyle. That's what I'll usually tell folks to think about first.
I think the one that you mentioned there that's really interesting is the travel one, because we have on our team, we have a real estate investor. He has a house in Philadelphia and they call it Meds and Eds. And he had a lot of travel nurses, and that turned out to be, great, mid-length term tenants. But let's talk a little bit about evictions, because I think that's the thing that makes people just terrified. So you've had some eviction stories. Give me a horror story.
Oh, I mean, there's been property fires to SWAT teams raiding an apartment that I was getting ready to close on.
Oh,
Most of the tenants that I had to evict was when I was investing in C-class areas. It was affordable housing, and the tenants that I was evicting, 99% of the time, they were tenants that I inherited from a previous landlord that was a slumlord and didn't actually do any screening, or because the property was such garbage, he couldn't get a high quality tenant. There were a lot of the buildings that I was buying at that time, you could rent a 2 bedroom, 1 bathroom for $400 a month. Mind you, this is like 2009, 2010 when I started branching into affordable housing. But even then, that was so cheap. You could only attract so much a quality of a tenant. Um, so I always tell folks, like, I've got those horror stories, but you can look at A class and B class properties and not have issues if you do screenings right. But even then, when I had those evictions, almost all of them I did on my own. And because I had ironclad leases, I won all of them. There's only one I technically didn't win. I actually won, and then they appealed, and then we went to the appeal, and then I won again, and they couldn't appeal anymore. But yeah, if you do the screening right up front, and then you treat your tenants well, and you be firm and fair, it's really not an issue 99% of the time. And then that 1% of the time where it is an issue, just make sure you have ironclad leases, and it's not a problem at all.
so you mentioned affordable housing. Have you done Section 8 or other housing vouchers?
Yeah. I'm actually a big fan of Section 8. I don't do it anymore. And part of it was our lifestyle change, but it's sort of like house hacking. You can do house hacking for quite a long time, but what you want to do in your 20s could be different in your 30s. But I was a big fan of Section 8 because your rent was guaranteed and it was deposited on the first of the month. And sometimes it even came early and it was guaranteed. But one of the bad things that reps that Section 8 gets is that you get garbage tenants, but you as a landlord can actually screen the tenants after they're already approved for Section 8. So it's not like you automatically have to accept them. And then the other thing is people will be like, oh, the Section 8 inspectors that come in your property every year, they're really nitpicky and they're going to make you fix a lot of silly things. Not every now and then you'll get a crazy weird inspector that just is overworked, underpaid, and he'll complain about something real small. But 99% of the stuff that those Section 8 inspectors want you to fix is stuff you should be fixing as a good, ethically, morally, you know, um, sort of landlord. So, I've had folks be like, oh, he made me fix this window and, put in an extra smoke detector. And I was like, well, your window was cracked and it was leaking air. It should have been fixed. And then, yeah, you only had two smoke detectors. You probably should have had a third one over by the bedrooms. Like, to me, that's not being nitpicky. He's just making sure you have a safe place. So you shouldn't get all, up in ruffles over that. So I think Section 8 definitely can get a bad rap.
Yeah, interesting. I feel like that too. And I feel like with the new administration, we're going to see more focus on affordable housing. And I think there are probably going to be more opportunities. There's already been talks of expanding some of those vouchers just because the need for workforce and affordable housing is so huge. And there just isn't enough supply, whether it's building apartments or a smaller apartment buildings, single family rentals. The supply is just not there right now.
Yeah, you have to jump through a couple more hurdles. You got to fill out some paperwork. I mean, that could definitely be a negative, but the upside is you got that guaranteed rent going into your bank account every month. I mean, like, for most folks, it's like, hey, I'll rent a place. Maybe it'll take me twice as long as it normally would, and I got to fill out some extra paperwork. I mean, for guaranteed rent, most folks, when they think about it, would say, hey, that's a fair exchange.
Absolutely. So let's talk a little bit about financing. That's always a hurdle for people. What advice do you give people? Are there programs that you recommend, or do you feel like they should check out FHA loans or things like that?
Yeah, so there's a couple big programs out there. So, a conventional loan, both Fannie Mae and Freddie Mac have programs for sort of first-time home buyers or low down payment programs. So, 5 or 10% or less. And then you've got your FHA loan, so 3.5% down. So, if you're buying a $200,000 property, that's 7 grand. If you're a veteran or in the military, the VA loan, buy a house 0% down. You can buy a multifamily property. And then one of the other really great ones is the NACA, NACA. You have to be sort of at or below the poverty line with your income. You have to go through some first time home buyer education programs. There's a couple extra hurdles there, but they do some 0% financing. Their rates are actually better than FHA VA rates. And it's a phenomenal program, but it was designed to specifically get you in that sort of mid to lower income folks, help them get into housing. You can buy a multifamily property with a Naca loan as well. So, I mean, there's some really great options to get in there where you don't have to have perfect credit. You don't have to have huge down payments either.
Interesting. So I haven't heard of that loan, but it sounds fantastic. So is that for anything under 4 units?
Yeah, yeah. With all of those, they're 4 units or less. Small multifamily. Because I know you know this, but if folks are listening in, once you get to a 5 unit, it's considered commercial property, and there's all sorts of other hurdles that you go through there. So if you're really looking to do a house hack, you want to look for 4 units or less, so you can get that traditional financing options that has the low down payment.
Totally. Do you feel like for the beginning house hacker, it's maybe better to try a duplex or something smaller than immediately try for something where you've got multiple tenants?
I'd always say, like, what's your personality? What are you up for? Do you mind hustling? I mean, would you rather have your part-time or side hustle be managing 3 units in a 4 unit, or, delivering pizzas or doing Uber Eats delivery to make extra income? To me, the answer is like, learn to be a landlord. Worst case, you realize it's not for you and you cash out after a year or two. And in the best case, you learn to be a landlord, and then you can start to use that experience and the money you save from house hacking to buy, that second or third or fourth property, or start to scale up your real estate portfolio. So it's really where you're at. And even if you don't want to manage the properties, you can look at bringing in a property manager. You have to give up obviously some of your income, but there's a lot of folks that would say, like, I just don't want to manage the tenants, but I'll hire the property manager and I want to do the 3 unit or the 4 unit. So there's so many options there. I always say, like, try not to make an excuse, because whatever it is, there's a way around it, right? Like, oh, I don't want to manage the tenants, get a property manager. Oh, I don't want to fix a toilet, like, hire a maintenance person. Like, there's so many options. Or, like, a lot of folks are like, oh, I can't save for a down payment. I forget what it is, but the average, like, income refund check was like $2,600 a year. It's like, well, you save that and then save, 200 or 300 bucks a month and work a part-time job, saving another 200 or 300 bucks. At the end of the year, you'll have money for a down payment. and you can go buy a two or $300,000 property to house hack, and then you eliminate your housing costs. So now you're saving 10, 15, 20 grand a year. That's going to help you, get ahead even further. So there really isn't, to me, a lot of excuses why you can't house hack. If you've got the will, there's a way to do it.
I love that. Yeah, we've talked with investors before, and we've talked about that sort of analysis paralysis where you look at everything and then you don't do it. You just mentioned another thing that I hear a lot is repairs. Like, oh, I don't want to deal with repairs. So when you were starting out, did you do your own repairs? Are you one of those people who started watching all the YouTube videos? We have a member of our team who's learning everything from YouTube right now.
YouTube University, right?
Exactly.
In 2002, YouTube wasn't around quite yet, or if it was still in its infancy.
Not in the way it is now.
Yeah, yeah. So I was fortunate, man. I had a phenomenal dad that I felt when I was younger was torture. He made me like learn to change the oil, learn to, when I was horsing around with my brother and sister, punched a hole in the wall when we were climbing on something that fell in. I had to go to Home Depot and buy the stuff with them and go back and watch them learn to patch it. So I learned to do a lot of the basic stuff. And then as I started scaling up, I was in my late 20s. I had more time than I had money. So I wanted to learn to do it to save on those costs. But, now, me and my wife, we're married, we're further along in our life. I don't want to worry about a maintenance request. We outsource everything and we use property management software. So tenants can put in the maintenance requests online and it gets automatically directed to maintenance folks. And, you know, eh, there's so many ways to streamline it. But yeah, I started learning how to do a lot of that myself, partly to save money and partly just to understand it. That way, when I did get to the point of outsourcing it, I know someone was trying to quote me too high for something. I'd be like, well, that's only $50 in materials and an hour of labor. You're not going to charge me $800 for that. You should only be charging me 100 or $200.
Yeah, it definitely gives you fundamentals for the long run and helps you not get taken advantage of. And I think you said something really important there too, which is that sort of that time money spectrum. Because when you're young, you may have the time but not the money. As you get older, maybe you've got more money, but your time is more precious to you. So I think part of this journey of real estate investing is always kind of balancing those two things and figuring out what matters to you in this moment. Is it making more money and using the time, or is it the opposite?
Yeah, and one of the great things about real estate investing is house hacking is what you do today is not what you have to do tomorrow. I put in all that extra time when I was younger. We did affordable housing, I did college housing, and then that was great for a long time, but then I wanted simpler stuff, so we started to sell that off and invest in syndications, which were easier, where there's full-time management, there's a sponsor of the deal, and all I got to do is read my P&L every month. And then we do a little bit of higher end development where we'll take a older building and turn it into sort of a higher end apartment. So you can shift what you're doing and how you're investing over time. It doesn't have to be this permanent thing. And that's one of the things I always tell folks with house hacking is it's a tool. If you want to use it for 2 years, do it for 2 years. If you want to house hack for 10 or 15 years, house hack for 10 or 15 years. Pull it out, use that tool as long as you want, and then change to something else.
I love that. You mentioned something earlier I wanted to zero back in on, which is ADUs, accessory dwelling units. I'm fascinated by the rise of ADUs. I think it's going to be huge. Part of that is because I used to live in Los Angeles, and California is now allowing ADUs, and in LA where you sometimes have a large enough lot for doing that, it became very popular. What do you recommend for people about ADUs, and how can they use those to gain extra income?
Gosh, I mean, the ADU is phenomenal. You're essentially building a duplex, but it's detached. I mean, so if you want a house hack, multifamily is so hot right now. Trying to find a duplex or a triplex or quad can be really tough. But there's so many properties out there that have that detached garage building that has space to be converted into apartment in the old garage space or above it, or the lot's big enough where you could build a 25-foot by 25-foot building and have a nice accessory dwelling unit. And to me, that's a phenomenal way to get into house hacking because you can live in the main building and then rent out that ADU. Or say you're younger and you're in that hustle and the grind phase, build out the ADU, live in the ADU, rent out the main house, which is going to bring you more income. And then when you start to get dating and serious and you need more space, flip it, move into the big house and then rent out that ADU. And then once you're older and you have that brooding teenager that is just horrible to be around, you can stick them out in the ADU, or that college kid that wants to come back home. So like this ADU style of house hacking, you could literally be in that same property for 20 years and flip back and forth and how you use it. It's just absolutely phenomenal. But one of the biggest tips I'd really have to give is think about hiring an architect or someone that has design experience with small spaces. A lot of the times you're not going to find an ADU that's 1,000, 1,500, 2,000 square feet. A lot of them are like a one bedroom or a studio, or maybe you'll find a two bedroom. But an architect nowadays tends to really think about open spaces, open concept. Designing a 3,000 square foot home is very different than you know building and laying out a space that's 500 or 600 square feet and making it super efficient and maximizing the best use of space. And if you do it right and spend a little bit more money on someone that has that design expertise with small spaces, I mean, you can have a 500 square foot ADU that feels enormous. But it's all takes that design elements in there.
Absolutely. What do you think of some of the modular options that are out there? There are a lot of different manufacturers now. There's a few startups that are doing it. Do you think that's an option for people as well?
It is, I don't know enough about, and part of the challenge too is, building and zoning is changing rapidly across the country. When LA just changed it, I mean, I think it was awesome because they realized like we're running out of space. There's so much traffic. So how can we provide more housing? And you have to increase the density, and the ADU is the perfect way to do that. So uh, I think the modular options can be great. You just got to make sure it's going to be okay in your local area. They're okay with that. One of the other things too is I found folks, it's if it's too trendy and too new, not everyone wants to buy it if you go to resale. So I'm a little curious how that'll work out as well in the end. But I mean, gosh, even if you put 30, 40, 50 grand into a modular ADU and it's all done and up and running, and it only increases your value by 80% of that. If you've got the property for 10 years and that place is bringing in a grand a month, it'll more than pay for itself. If you don't get that immediate upside value, but in most cases you probably will. So um, I, I you can build better products in a factory environment than you can out in the open air. So that's probably the way we should go with everything. But we'll see how it catches on. I guess I don't really have a firm answer of what's going to happen with it.
Yeah, me neither. It's something I'm studying. But you mentioned zoning, and zoning is something I'm fascinated with. I feel like before the pandemic, we had a few cities that decide to upzone, decide to allow, multifamily in a lot of areas. Stopped a little bit during the pandemic. Now it seems like I'm starting to hear more buzz about zoning for multifamily. Is that something that you're hearing too?
Yeah, I mean it's happening everywhere, and I think it goes back to the comment I just made, where how do you get more people into a space? You either have to expand out or you have to increase density. And it's ADUs are a good way to increase the density. And then the other way is multifamily. And there's critics on both sides of it. But if you can put two families on a lot, that lets you increase the density and have more housing. If you can put three families or four families on the lot, I think the challenge where a lot of neighborhood critics come in is when you all of a sudden, knock down four properties, four single family houses, and you put in 30 units or 40 units. It can really change the dynamics, the culture, the personality of those neighborhoods. That's something that's happening here in New Orleans, where there's a lot of critics over developers coming in and knocking down those, 4, 6, 8 properties to put in big buildings. So, if you can do, instead of knock down a single family house and put in a duplex or a quad, it gives you more density, but doesn't have that overwhelming um, effect that, a larger multifamily apartment building can have.
Absolutely. Well, this is a great place to take a short break.
Like what you're hearing? Get more real estate investing news and advice from Millionacres on Instagram at Millionacres and on Twitter at Millionacres_co.
Christina Real Estate Investors provides an unparalleled opportunity for investors nationwide to participate in curated real estate portfolios in the West Side region of Los Angeles. For more than 40 years, Christina has generated exceptional returns for its investors through a unique strategy and structure focused on tax-advantaged wealth preservation and long-term capital appreciation. By investing with Christina, you'll own a direct stake in exceptional properties located in ultra-prime submarkets of Los Angeles. Managed by a highly skilled team with a proven track record, Christina underscores its philosophy by co-investing in every offering. Coming soon, Lawrence Taylor, founder and president of Christina, will speak about the firm's current portfolio offering and ways to invest. For more information, please visit ChristinaLA.com.
I'm back with Andrew Kerr of Financial Independence by Real Estate Investing, and we're talking about building your financial future through house hacking. So I noticed that you recommend investing in multiple areas. Why not just buy a bunch of properties in a single location?
Yeah, I mean, that's definitely the way most people start. And part of this, I think this is recurring themes coming up for us of as you move through different phases of life. And I think this is one of those, you start with the house hack and you do a second house hack and you turn that first one into a rental and you end up with 3, 4, 5 properties in a geographic area. I think the next step is to try to insulate yourself from any potential downfall. And to do that is to start investing in different, MSAs, geographic areas. So it, I don't know if we're going to ever have another huge giant recession like we had in '07, '08, but or how far it out will be. But most likely, what will happen sooner is regional ups and downs. So if you've got a really big employer or two in your area, or there's a major setback in a region, that can negatively affect you for years to come. So I think once you get sort of past those first 2 or 3 steps, start looking at investing in different geographic areas. And that's sort of where I got, halfway through my 18 years of investing was, how can I look to make sure I'm going to be stable for, several decades, where early on in my 20s, it was, I got to hustle. I'm trying to get ahead this week, this month, this year. Then it turned into, now I'm starting to look a couple years out. And now it's starting to look at, hey, we're in our 30s. How can we plan for the next 30 or 40 years? And, I can't predict what's going to happen in 40 years in an area, but what I can say is most likely if I'm invested across 6 geographic areas that I think are very stable and have a lot of upside, one of them will probably fail for some reason outside of our control, but the others should stay fairly stable. I mean, look at Detroit, was a huge city. I mean, like 100 square miles, was booming for years and then has essentially fell apart. And now there's been a resurgence over the past couple years. Parts of downtown are being revitalized. So I don't want to have all my properties in what could be a future Detroit.
Well, and you started off in Raleigh, Durham, which right now is one of the markets that is one of the hottest in the country. I mean, Apple just announced that they're moving there. And even before that, if you've got the Research Triangle, there's just been so much activity in that market. When you got beyond Raleigh, Durham, how did you know where to choose next? What was your process like?
Yeah, so I really looked for value add apartment deals, and that was really my first criteria. Is like who do I know in my network that is getting ready to put together in a syndication or an apartment deal that has this value add potential. So that was the first criteria. And then the second criteria I looked at is, okay, how do I feel about that city, that county, that state? And then I started looking at it like, okay, great. Is there job growth in the area? Is that state more tenant friendly? Is it more landlord friendly? Is there a lot of not only job growth, but what's the education system like? Are people fleeing the state? As much as I love California and being born in California, I'm a little worried about the trend that's been happening in California with a lot of the wealthier folks moving out of it. California is still always going to be California, but that to me would be a trend of like, hey, I don't know if that'll be good in 10 or 20 years. So that's what I looked at as like, one, who do I know that's doing deals that I can trust? that meet that value add criteria, then I went in once I was presented with those opportunities is to start to analyze those geographic areas and sort of have a gut feel to pair with some data of do I think this is a good long-term play over the next decade?
Well, that's sort of an interesting question too. Is it deal first or location first? Because I think for a lot of people, it can, a lot of people pick location first.
Yeah, I would generally say location first. Where I was at when I was cashing out of my affordable housing, I was like, at this point, I just need deals. So if I was looking for someone that I trusted and had experience first, now if I was looking to do deals on my own, I would definitely look at a geographic area first, then start to find the deal. So yeah, generally, I'd say you look at a geographic area first, and then start to go through building that deal flow or deal pipeline to then do deals in those areas. But with where I was at, it was, hey, I just need apartment deals to invest in, and let me find someone that I can trust, and then I'll analyze the geographic area if they've got a deal.
So when you analyze for you, does it start with the data and then do you go there? Do you drive around? Do you look at the neighborhoods? What does that whole process feel like for you?
Yeah, I always look at it as real estate investing is an art and a science. So the science side is crunching the data, looking at forecasts, the numbers, the deal analysis. But when I'm looking at like a bigger deal, I look at three things. What's the geographic area? What's the actual property itself? Because I mean, you could be in a killer geographic area, but if the property is horrible and the property is in a bad area inside of that good geographic area, you can lose. And then the third thing I analyze is the person putting the deal together. Are they trustworthy? Do they have the experience? Do I actually believe that they can execute on their strategy to turn around this property and improve it? That's in this great geographic area. So, you know, you got to have the science side of it and look at all the numbers, the forecasting. Is someone projecting 10% rent growth per year? You know, my gut would say, hey, that's probably not going to be possible. Um, so you have to have that art side of it, and then that's driving around looking at the properties is really where that art side comes in, is this human element of, are you going to trust this person? Do you feel good about the area? Are you going to, where I'm at now, I like to sleep very well at night and not have the stress and worry of a more riskier property that has a lot of upside potential.
Right now, it seems like it's so hard for investors in any market. I mean, this residential real estate market is just insane. There's no inventory anywhere. How does someone even get started right now? I mean, is there any hope in any market? Are you seeing anything anywhere that holds promise for people?
Yeah, and really, you got to find the off-market deals. I mean, you can still find stuff on the MLS, but if you can go direct to the potential seller, you can get stuff. And then the other thing is you got to be really open and creative. So whether you want to be just buy a true investment property or you're going to do a house hack, you got to think and be creative. So I would look for the lots, the houses that have the lot that's big enough to build an ADU, or the property that has the unfinished basement or a walk-up attic that's unfinished that you can turn into an income suite, or look for the hidden potential. So the fourth house hack that me and my wife are living in, it's in a historic part of New Orleans. When we found the property, it was on the MLS. It had been on for about 2 or 3 weeks. It had some action. The seller wasn't moving. But when we toured the property, when you go up to the second floor, there's actually attic space, but no one knew how to tap into that attic space without um, still meeting code. And there's about 300 square feet of space in there. And I realized, hey, I've got an architect friend. I think we can build a shed dormer, which gives us clearance height to walk through the one room and get into the attic space of the other room. And we're in the middle of renovating that space right now. It's going to cost us about $100 to renovate it. And value of property in this area is going about $250 a square foot. So it's this, hey, here's a deal. It can work as a house hack and a rental. And I'm being creative to see what potential does that property have that I can unlock that everyone else is missing. Everyone else that walked up to the property said, oh, there's this little crawl space you can go into the attic and you can just store a bunch of junk. I saw it as, hey, this is untapped space with a lot of upside potential in it. So, again, we'll invest $100 a square foot to build it out. the return on it will be $250 a square foot for that space once it's finished, heated and cooled.
Interesting. So obviously you started house hacking in your 20s. You're not in your 20s now, I'm guessing, and yet you've still kept going with it, even though you've tried a ton of other strategies. What is it about it that still brings you back?
Yeah, so I mean, there was two things. One is, what is it that you value? And for me and my wife, it was pre-COVID, we loved to travel. I mean, my wife's been to 40 different countries. I've been to 35, 36. We had 3 international trips planned last year before COVID. So for us, we don't need a 5,000 square foot home. We need something that's comfortable for us and works and has a lot of the creature comforts that's going to make life enjoyable. And so that was one part of it. The other part was I started investing when I was really young. Once me and my wife met, we got more serious and we moved to New Orleans. I sort of took this approach, let's start when we're building our life together. Why don't we go buy a property together? But instead of buying the traditional single family home with space we don't need, why don't we do a house hack? And my third house hack was her first house hack. That property gave us 8 to 10 grand a year in income on top of living for free. My wife had the 65 gallon jacuzzi tub, 2 bedroom, 1 bathroom. We had 11-foot ceilings and a historic property. The place we're in now, my wife, we're turning that upstairs and attic space into a giant income suite. Her walk-in closet's going to be about 7 feet wide and almost 17 feet long. We're going to double vanity. And for most folks, when they walk through, they'll say like, this isn't sacrificing at all. You're 3 bedroom, 3 bathroom, fenced in yard. You're in a historic district right down the road from the French Quarter, bars, restaurants, everything's nearby you, but our tenant on the other side covers our mortgage for us. So to me, it's we wanted to have a nice quality of life and low cost of living so we can go spend our money on the things that we love. And part of that was I wanted to keep doing nonprofit work, which traditionally just doesn't pay very well. So that gives us the ability to still go fly business class to the Middle East and go to Petra and Jordan and do all the fun stuff that we value.
Tell me a little bit about your nonprofit work and how that kind of works with your real estate business as well.
Yeah, I mean, I've always had the approach, when I really started scaling up my real estate investing, I was doing disaster response work. I would be in Haiti or Indonesia or Philippines, and it wasn't you leave on Monday, you come back on Friday type of business travel. It's, hey, we're getting a call Saturday, we're all flying out on Tuesday, and I'm not coming back for 2 or 3 months. So I very early on looked at how could I manage property remotely or do work on property when I was in between the travel and deployments. So I always had this, how could I hack this and make it as efficient and streamlined as possible? What systems could I put in place to make it so it's easy to manage if I'm on the other side of the world, and keep my housing low? So that's how I started, was in disaster response work. After I left mortgage banking, did work in Kenya, and then worked for a big global foundation here in the U.S. for the past several years. So yeah, normally I'll spend 30 hours a week doing nonprofit work, and the real estate investing is something that I always try to keep at 5 hours a week or less. Obviously, if we buy a new project and there's some renovation, you've got extra legwork up front from negotiating due diligence, getting plans drawn, or getting bids. But we really try to keep it where we can manage our real estate investments in 5 hours a week or less.
I love that. So you've really used real estate to help you get what you want out of life. And I think that's an important thing for people to know, is that it doesn't have to take over and that you can use it to get kind of what you want. Is that something you work on with people when you're advising them when they first start, is to think about their long-term goals in that kind of way?
It is, and I, having a podcast myself, you know, we always like these headlines of like, hey, this person went from 0 to 100 properties in 3.5 months. There's a lot of these folks, and I did the same thing. It was like, oh, I got to 5 units, I got to 10, I got to 25. Now I got to keep going. I'm not going to be successful when I'm to 100 units, or I got to get to 1,000 units. And what I realized in 2016, when I was hitting just at those 40 units, was, hey, I actually don't need the unit count. What I need is the cash flow. So we'll try to take this approach with folks of like, do you actually need to be at 1,000 units? Do you want to create this giant business that has tons of employees that you have to manage, and it's just going to replace whatever job you're working? If that's really what you want, great. But for most folks, they like the idea of real estate investing to give them more free time. So we'll try to work with them and say, look, yes, you don't need 100 units to be successful. You could have 5 paid off units and that could replace your job. So where do you actually want to be in the short term, midterm, and long term? And for most folks, they get caught in this trap of like, I got to get all these units to be successful, and they just end up creating another job for themselves.
Yeah, that's a really good point, is that when it starts to become too stressful, then, then nobody's having a good time. Well, this has been fantastic. As we wrap up, I just want to ask you a little bit about the New Orleans market and what you're seeing, because you're the first guest that I've had from that area, and I think it's a really interesting part of the country.
Yeah, it's been a challenging year over the past year where the economy here in New Orleans is driven by tourism so much. A lot of hospitality folks were laid off, didn't have work. Luckily, the stimulus helped get them by. But now there is a big issue where, as things are reopening, small businesses can't get enough people to come back and work for them. They're doing $20 an hour for line cooks. They're doing $7 minimum hourly wage for wait staff bartenders with a guaranteed $200 minimum per shift. So they're doing a lot of stuff to lure folks back into those industries. The housing market has just been absolutely crazy. I mean, it just blows my mind what stuff is selling for, where I'm looking at it and I was like, even if I was buying that to live in, I wouldn't pay that price. And I don't think it's going to stop. I mean, there's the shortage of housing. There's, trying to figure out, do you go with more density? And then, the lumber issue that just happened with the prices going up, adding another 10, 20, 30 grand to a new construction that's already, I feel, overpriced is just going to make it even more expensive. So yeah, it's crazy. I'm shocked the way stuff's been going, and it doesn't seem like it's going to be slowing down anytime soon.
Yeah, seems like most of the country right now. Well, Andrew, this was fantastic. Thank you so much for your time. And a note for listeners, you can learn more about his system at FIByrei.com. Remember, you can always email us at media@millionacres.com to share your thoughts, or call our new voice line at 844-615-2201 to become part of the show. Stay well and stay invested.
Thank you for tuning in to the Millionacres Podcast. I hope you liked today's show. If you enjoyed this episode, please consider subscribing through your favorite podcast provider. If you have any questions, please feel free to drop us a line at help@millionacres.com. Stay well and stay invested. People on this program may have an interest in the deals, offerings, or services they discuss that Million Acres or the Motley Fool may have a formal recommendation for or against. Always consult a certified tax professional before acting on tax advice, and do not buy or sell assets based solely on what you hear.